Good morning, guys. I hope you guys doing well, and welcome to today's edition of the London Session Open. Today is April 4th, 2019, and you know what, guys? The market is finally starting to move a bit, at least a little bit. Talking about things like metal prices. As we already know, crude oil prices have been doing quite good, and we have definitely some decent momentum in the DAX 30. So we're going to talk a bit about the markets, and probably, if we have time, we'll probably do a bit of crypto as well. And yeah, of course, tomorrow is known from payrolls. It's going to be hopefully a really busy day. So things are looking quite good. Now, before we start, as always, I need to stress that trading financial markets, unfortunately, is high risk. And we may lose all of our invested money. In fact, about 75 to 80% of people that trade with CFD brokers lose money. So it's not a very easy thing we're doing here. In fact, it's very difficult. I would say it took me about 8 years to become really, really good in trading. I started in 2016. My first properly good, profitable year with some decent money was in 2016. So please bear that in mind. And of course, what's different now compared with back in the old days is that there's more profitable traders around, I think. Remember, Forex started trading and opening just I think in the 70, 73 or something like that. And then internet trading started in, I think, 2000. And I started literally 6 years later. So it's not a lot of experience. Now you have a lot of people that are good at the markets and can guide you. Because someone like me has probably been in the path where you guys are right now. And for example, like for clients of ATFX, we do offer coaching. Okay, guys, let's kick off. Euro versus the USD, a bit quiet today. We'll see. I mean, most of the data, I think, out of the US has been good. On the other hand, a lot of the data out of the Eurozone has been bad. So I think we had some bad data this morning. Let's see here. I think it was factory orders in Germany that slumped by 4.2%. And at least on a relative basis, as I've been saying before, US data is holding up relatively well, whereas in particular German data has been slumping. So I think we're looking at here. Is potentially a further decline if the non-farm payrolls are good. If they're not good and market sort of gives up on everything, we might just go back to maybe 113. So I'm looking for a break at 111.64. Break here could potentially open for a move to the downside. And if the stop would be, for example, placed just above today's high, so if we would have a break today, we go down to 109, then the risk-reward ratio is about 3.32, so it's not that bad. And we could hopefully sort of start trending and seeing something maybe we've been seeing here. That would be amazing. Right now, it's just been choppy markets since June last year. GBP versus the USD is going up a bit. I mean, I think it makes sense. You know, as far as I understand it, it's probably going to be a delay to Brexit, and the Labour Party and Tories are finally speaking. It's quite interesting. I've been living in the UK for 10 years. And it's interesting to see how, you know, just right now, sort of the biggest party, the two biggest parties, which represents literally, I guess, you know, majority of all the people in England are finally speaking with each other. I know they have very, very different views, but I mean, Brexit itself is extremely controversial given with how few votes Leavers won. So it's good at least to see them working together. And other places like Sweden, for example, where I'm actually born, they had no government, I think, for like 3 months or something like that, almost 4 months, just recently now. But finally, like arch enemies that would never, well, actually, the arch enemies never really needed to work together, but a bunch of the allies of the arch enemies, so to speak, had to go together. And the only one that they're not speaking with over there is the extreme right groups. But yeah, it's good. Brexit is an important thing. The two biggest parties are working together now, and hopefully they can deliver what they said they're going to deliver. We'll see what happens. The market is taking this slightly bullish, I guess, because we all know that Labour is, again, slightly more soft. And again, is really, I guess, what the people want. And it's always going to be a ton of compromises and things like that. Anyway, from a market perspective, which is what we are interested in here, because this is not a political show, well, the news itself is rather bullish, I think, but we could go maybe up to 132. At most, I think 133. And then people probably want to see some action. Until we have that action, we'll kind of continue to remain sideways between 29.52 and 33.82. Okay, so we talked about buying here, and we could probably go up and then probably go a little bit higher. I think that's it. I wouldn't get too enthusiastic or carried away. Just the unknowns that just makes it very difficult to trade effectively. Here is your dollar yen trading sideways between 109.70 and 112.17. Turns bullish on the break to the upside and turns bearish on the break to the downside. As for gold, it's looking really interesting as well. It could be this, or could be euro dollar. Both of them are equally interesting. Actually, this is more interesting than the euro because here you have a solid pattern, right? You have your head and shoulders pattern, and the break to the downside here, 1280, should really open up for further declines. The difference between the head and the neckline gives you a potential decline of what, 60? Is it? Yeah, $67. Actually, sorry, I don't understand how I can misjudge this so much. It's actually even better than I thought. Down here, that's your TP. So probably not gonna go all the way down here. Maybe we'll go somewhere here, but definitely lower. If we would hit the take profit and stop goes just above the high, then you're looking at a risk-reward ratio of 5.24. That's better than some of the cryptos you're seeing right now. Crude oil prices. So we reached the first target, the second target. We still have that third target, which is here, the lows. And then you have the head and shoulders target, which is here, which we talked about on the break here. Now, I think we need to be clever here. As I said yesterday, I think this is probably going to go down. You can clearly see it on the candles. Doesn't mean that it has to go down. Definitely doesn't mean that we should be short selling here, but I think we can definitely have a bit of a pullback and then probably upward. So if I was long from here, I would definitely book profits. S&P 500, I'm optimistic. I think this can go higher as well. But as last time, that the best time to buy was down here. It is always possible to add a little bit on breakouts here, but I would prefer a pullback. That's what I prefer today. And I think maybe we'll have a 50% correction. As for the German DAX is literally on fire. As being ridiculed by a guy online for having a bullish view on the DAX. I did actually get stopped out on the way because the market did want to take this little detour. But look at the market now. Now, looking at this going forward, you have a massive head and shoulders. You got yourself a left shoulder. You have yourself a right shoulder. And you have yourself a head, which is here. Okay, so what you're looking at here is potentially a bit of a pullback and then upwards. There are different ways of interpreting this. So some people say, purely technically, purely sort of trend following, the low is down here. So long as you're above this level, you're dealing with an uptrend. That's it. So that's what I would traditionally do. But since the last year or so, I have very tight stop loss orders. That's how I can get very good risk-reward ratios. And what I'm looking at here is that this is the breakout candle. This is the candle that put this head and shoulders into motion. So as long as you're above this candle, which is the April second low, I'm going to be bullish. Now, the exact level is not the exact low of that day. It's actually 11,637. And I'm thinking, okay, if one didn't buy here, but if we have a revisit of that, I think people will be interested to buy. So we're looking at here something like 11,828. Risk-reward ratio is going to be something like 3.8. But that's if we only hit this first target here, okay? And then If we actually hit the head and shoulders pattern here, then that's all different. Now, again, we need to be clear what's going on here. Sometimes, you know, for example, like in the case of the euro, yes, the euro has not broken down despite good US data and despite very weak German data. We could argue there that, well, maybe the euro is not broken down because the market thinks that German data is going to improve. That could be it. I mean, clearly, if you look at the German DAX, that seems to be the thing. Like the markets in Germany think that, or the German DAX think that German data is going to improve. So that might explain why the euro dollar is where it is. But in the case of the euro, we're so close to breaking down that is more likely that people are going to say, well, you know what, the data's been bad, as short. And there's a discrepancy there. Now, in regards to the German DAX by itself, I think is driven by not just what's going on in Germany, but what's going on in the US and many other companies, because these big companies, they don't just operate in Germany. So what I'm thinking here is that the people are buying, again, not because the February figures of German data was bad, but what they maybe think the February figures are going to be in 2020. I mean, I think that's what the market is looking at. Remember that most people, they buy stocks today because of the future. You know, you can see that because you probably heard about the PE value. The PE value shows you the earnings in relation to sort of it should be actually price, but I think it's the earnings related to the company value. So that value there is usually, I'd say, 10, 14, 20. So if it's a 15, that means you in essence need to have 15 years of earnings to buy back the whole company. So that would be sort of when you get your capital back, so to speak, when you get fully what you invested in. So the PEs seldom go down to 5. If they are a 5, it's because the company is on the brink of ruin or something like that. In fact, the PEs will sometimes be something crazy, like 80. I think Facebook a few years ago was like something like, when it was just introduced, it was something crazy like 80 or something. And a lot of people said, well, it's not a good deal because of the PE value, but they managed to increase their profit so much that the PE value suddenly looked acceptable. So the key point here, though, is that everything is trading at a premium. Okay, when you want to buy the local shop, like a front store or something like that, with the restaurant already set up, the owner will probably sell it to you for maybe a better premium, maybe 1 year's earnings, so that the PE is 2 there. Maybe if it's a really good restaurant, he'll sell that at a PE of 3, with maybe so everything is an earning. So again, the markets are not necessarily trading on today's news. They're trading on what may happen most likely in the next 9 to 12 months. And I think that's why we are up here, despite the bad data. Okay, that concludes. Sorry, let's actually talk a bit about cryptos. So with the ATFX, they do offer cryptos as well. If you click on trading, retail edge account, that's what you want to be looking at. You do have the standard account, but the standard account is going to offer you spreads like any other broker, but the edge account will offer you very, very tight spreads. Now, what is interesting here is that they have cryptos. For some reason, it says in Spanish here, but this is crypto. So they have Bitcoin, Ethereum, Litecoin, and Ripple. And these are the spreads here, which are relatively, I think they're decent spreads. I think they're tighter than most other. So you want to check this out. Now, in regards to something like Bitcoin, because we'll just focus with Bitcoin today, I had this triangle, some analysis I did a few months ago. We broke the triangle, we reached that profit target, and then we got a negative reaction there. I would not get involved in Bitcoin here today. Rather, because technically it's short-term overbought. I suspect that other people, if they are going to do anything, they're probably going to wait for some sort of pullback. So what are the different pullback levels that people are looking at? Well, you can put a fib and you get maybe 4,600. So somewhere down here, I think, worst case 4,400 before turning bullish. This doesn't mean that this coin can't trade sideways and then have a bullish breakout. It could easily have that, but it's better to maybe focus on something different. This is Ethereum, which we looked at in the updates I do, where you can see the office in the background. And here we did have a move, but appeared to be a false move. But a re-break or a retake of something like 169 could potentially be what is needed. And then we'll have a break of this ascending triangle. And volatility has declined quite significantly since then. So I think you might potentially, you have the break here, and then I think people are going to put stops down here, if not down here. Okay, we're going to wrap things up. Guys, if you have any questions, do let me know. Tomorrow we'll do the webinar as usual, and we'll be back on Monday as well. But I will be in Barcelona this weekend for an event with ATFX in H10 Hotel Casanova. And it's going to be an all event on Saturday. So if you happen to be in Barcelona this weekend, pop by, send me a message via Twitter at AlexFX00, and we can catch up. As well, if you are interested in any of the coaching and any of the very tight spreads, then do let me know as well. You can reach out via alejandro.zambrano@atfx.com. These are the edge spreads. As long as you put a minimum of 5,000 euros, $5,000, 5,000 pounds, you get access to these ones. These spreads, if you are going to go to some major brokers, they're going to tell you, okay, we'll give you tight spreads, but please deposit 25 grand. That's sort of where you are. With ATFX, you can have access to this with much smaller amounts. In fact, a fifth of what you can get from very, very big brokers. And not only are these spreads tight, you can also see that the Forex miners are tight as well. And even some of the more Forex exotics are tight. Here are your spreads for metals and crude oil and all the different indices. And they even have shares as well. Keep on forgetting that. Okay, guys, have a beautiful day, a great day, and I'll see you guys tomorrow, same time. Thank you.